Very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As I speak on 1st February 2021, first of all, I'm extremely pleased that my dream of making an education platform is slowly turning true. As I speak, our TRFX Academy is having around 60 plus live videos, exclusive and private videos, whereby we are covering around 8 series, which is basic series, advanced series, exotic series, treasury series, PPP series, TMS series, and adding 4 more. So by the time the 4 would done, we would be closer to around 12 plus series. More importantly, now we are launching another series which is known as the model series. So what we do, we will create a model either on a paint, maybe on a softwares, maybe on there are some free project based softwares which are available, and we will take a pic of that model and we will share it on our TRFX Academy. And I am very hopeful that by December 2021, we would be able to complete around 1000 plus private and exclusive videos on our platform. And very important thing which we did, and we're going to be making this more better, is that now all the videos which are coming on our platform, TRFX platform, they are after the editing. And very soon we would be starting the editing using Adobe Premiere Pro. As we speak, Adobe Premiere Pro is one of the finest video editing software in the world. Even I read somewhere that even it is used extensively in terms of shooting and editing videos, documentaries across the globe. So very soon, of course, even today, all videos are edited, and very soon the editing will start from the Adobe Premiere Pro. And a lot of other initiatives are there. If you want, you can WhatsApp, or all details are there. All email and mobile details are provided. You know that Treasury Consulting Group is a Singaporean based group. And take my words, when in 2018, officially in 2018, I entered Singapore, I was under an impression that Singapore is really a great economy. And I was not having any questions as far as the governance is concerned in Singapore. But unfortunately, now I do not have the same opinion about Singapore in my mind. And there are ample of reasons behind that. Even today, I got 2 or 3 separate reasons, and I'm going to be explaining these reasons in the video. Since these are edited videos, henceforth, whenever I shoot these videos, I need 3 to 4 days of editing, and then it will come on the YouTube. In 2019, somewhere, Monetary Authority of Singapore, which is the Central Bank of Singapore, MAS, we call it MAS, asked for digital banking licenses. Treasury Consulting also applied for digital banking license, but unfortunately we not got. And here I saw the real face of Monetary Authority of Singapore. And I learned a hard reality that money matters than the brain. You might be having best brain in the world in the financial market, but if you don't have the money, then even the central banks do not accept you. But anyways, I'm not offended, because I know that because of this attitude, Singapore is paying a heavily price, and you know what is happening in Singapore. One of the consortium, which is Grab and Singtel, by the way, how would I say Singtel? Singtel is like Airtel of Singapore. The consortium Grab and Singapore won the digital banking license. And I'm sure what would happen once they would be launching their so-called digital bank. I don't know how should I say, but this pandemic really changed the face of the banking across the globe. Let it be honest. And not the face, rather it changed the outlook of the banking also, to be honest. Grab is a unicorn as per media, and Grab is as profitable as Microsoft plus Google plus Apple plus Facebook plus Amazon. You know, I love sarcasm. Grab is as profitable as Google plus Facebook plus Microsoft plus Amazon plus Apple. Maybe if I missed few, you can add. So you know about the profitability of the Grab. You know, before I continue, I want to tell you a story. Whenever we land at Singapore airport, I generally land at Terminal 2, Singapore airport, because Terminal 2 is my favorite. By the way, Singapore airport having 4 terminals, but I land at Terminal 2. You just go out and you use an app called Grab. And from airport to city where I stay is around $25 to $26. Yeah, you can say $25 to $26. And I love talking to people. I love making videos. So it takes around 35 odd minutes from airport to the city, the place in the city where I live. And I generally speak with the chauffeurs. You know, people have an egoist mindset that they always sit at the back of the chauffeur, but I always sit next to the chauffeur and always love interacting with the chauffeurs, because believe me that they have too much of information to give to you. And one day when I was coming from airport to the city, I had a very energetic interaction with the chauffeur of Grab. And he told me some realistic features of Grab, and especially on the revenue front. Like how much money is being given by a venture capitalist if I take one trip of Grab. And how much money is being earned by the Grab from the bill I pay. So example, I generally pay between $20 to $25 from airport to go inside the city. And he told me that out of this $20 to $25 you pay to us, some is my fees, and majority of the funding, he told me the composition, and I was like scared that how this business actually is running. But you know that, paid and sold media, unicorn and everything. In the last 2 to 3 years, we are facing a sudden shift in these unicorns. And what is the sudden shift is that these unicorns are now actually started raising the loans. So gone are the days when you get the fancy heading in the newspaper, could be Straits Times, Business Times, that Grab got this much million funding, so on and so forth. Today, something that really hits me is that Grab got a loan of around 2 billion US dollars. If I convert this into Singapore, it is around 2.6 billion Singapore dollars, Sing dollars. But I let me speak about US dollar, because there is a reason behind that. So Grab got a funding of 2 billion loan from the existing investors XYZ. The earlier, which was in the news, is around 750 billion. which means that it is around 3 times of what the earlier estimation. And the funding which was given at LIBOR plus 350 basis point. Oh my God, 350 basis point. This is the spread. The thing that hits me when the whole world, in fact, two things that hits me when the whole world is moving to SOFR, Secured Overnight Financing Rate. In fact, Singapore also launched SORA, which Singapore claims to be as a risk-free reference rate who would be replacing the LIBOR, but unfortunately, the funding was taken at LIBOR when LIBOR transition is almost going to start from June 2021. That is really a stunning information, that the reference rate is set to expire in 2021, somewhere June 2021, and in January, which is around 5 months from the transition dates, you are taking the funding in the same reference rate. And another thing that hits me, that you are taking funding in US dollars, so you have a currency exposure of dollar to Sing dollar. As I speak, Sing dollar is around 1.30 something. I immediately went to Reuters and saw 1 year LIBOR. As I speak, 1 year LIBOR is around 0.3113. I add 350 bips, so the 1 year cost is around 3.8113. And I multiplied this with 2 billion, I got the annual cost of 76.2 million as an interest. So if I'm taking $2 billion of funding, then I would be paying at least 76 million as a coupon. What about the principal, the currency exchange rate risk, which in our FX parlance is known as POS, principal only swap? Very difficult to compute. And I'm really not interested to compute because this will offend many people. And since it is a 5-year structured loan, I multiplied this with 5 and I got an amazing number, that 381 million of interest to be paid in next 5 years. Can you tell me a business who generates $380 million minimum profit, because that's an interest you will be paying wherever you would be using this $2 billion. $380 million US dollar of interest to be paid in 5 years. And by the way, I already told that the Grab profitability is more than the sum of Facebook plus Google plus Microsoft plus Apple plus Amazon. If I missed anyone, no offense, you can add. But Monetary Authority of Singapore gave themselves digital banking license, and still they're terming themselves as unicorn. I think every company who is taking a loan, they should be titled as unicorn. Let's make this a universal certification. Let's make this a universal certificate that if you are raising funding, you are unicorn. Straight, no issue. So 5 year, $381 million of funding. Now, before I close, just wanted to have few questions. Is this business model sustainable? We not yet saw profit in our existing business model. And we are not operating from 1 year, 2 year, we are operating since long. I'm sure the Grab would definitely have plans for IPO. And I'm sure that few apps, I'm not quoting the name of the app, but I hope you're getting, they will give ample of hype to such unicorns. Retail investors will enter, private equity and venture capitalists quit. And rest you know. Rest you know. This is our first story. But unfortunately, when I read the article in State Times, Singapore, I was like, the whole analysis is missing. Only the plain English is mentioned that Grab got $2 billion of funding, this rate, something like that. That's the reason I'm always saying that in 2007, reading business newspaper was about gaining knowledge. And now reading business newspaper is about losing knowledge. And this trend, I think, would continue. This is our first story. More stories are coming. Have a great- After watching this video, wherein we pasted lot of screenshots, I'm really surprised that how come these startups are surviving actually. And more importantly, what I am also putting a point at almost every video is that who are these investors who are investing in these startups, irrespective of knowing that they are in huge losses. Our next video would be on a startup called Robinhood. And according to the public information, Robinhood received around 3.4 billion US dollars of additional funding. I hope you're watching Reddit, basically an app who created a mess in many stocks. I don't want to name it, but you know. And silver. With $3.4 billion of funding, Robinhood got, I'm sure the same would get replicated in many more stocks now. We are living in a world when regulator is clueless, paid, sleeping, maybe all. And few venture capitalists and private equity players are just exploiting these opportunities at a maximum level. I once again wind up this video with the saying that a loss-making company who never touched P of profit is unicorn now. If Einstein, Edison, Newton, and Steve Jobs are alive today, they all committed suicide. Because they failed to justify how come a loss-making company throughout and choose any startup is a unicorn. Because if this is a practice, then Apple is not a unicorn, it is trillicorn. By the way, trillicorn is my word. Welcome to second part of the video. There is yet another company which we have in Singapore, and the name of the company is Razer. You know, the problem with the venture capitalist system is that every company which is funded by a venture capitalist is actually a unicorn. The day they fund a company, they certify this company as unicorn. So Razer is also a unicorn, as simple as that. Razer wanted to hire around 1,000 roles in the new headquartered in Singapore. That is beautiful. Can anyone tell me that I don't know how many of you even understand the payment gateway system or the business in which Razer actually is? How many of you ever been to the financial statements and saw that whether Razer is a profitable company or not? In this 2020 pandemic, thousands of startups died. Millions of job cuts by the startup. Not a single credible data by any website regarding that. But you know guys, what is happening across? The scene which is happening is that only on the venture capitalist money, the company announces that they wanted to hire this much people, and the paid and sold media will create a hype to that company. And this is not about Razer. This is about almost all companies who are funded by the venture capitalist. Almost all companies. I'm telling you that when in 2018 I came public, I talked about the SoftBank. Many Einstein, Edisons, Newtons, Graham Bells, they criticized me. And today you know that SoftBank is selling assets so that they can raise the money to be private. Oh my God. A public company is trying to be a private company. Why? Because once you turn out to be a private company, then probably you cannot, there is no mandatory thing on you to have information in the public domain. Today, if I wanted to know about SoftBank, I just go to the Reuters or Bloomberg and I can get whatever the information we have on both the platforms. I go to the website and get. But if you are private, then it is not mandatory to have the information. And this is one of the reasons why the leading private equity and the venture capitalist firms across the globe always love to be private so that they give as limited information as possible in the public domain and create as maximum hype as possible in the public domain. Now coming back to the third company, the third case, which is really very important to me. There is a Chinese company who just now defaulted on 500 million US dollar bonds. In 2020, Chinese companies defaulted around multi-billion default on the bonds. And they are not the only one. We saw defaults in India also. Specifically, many big Indian corporates defaulted on the bond obligation. And I'm sure that in 2021 as well, this default would definitely continue. But guys, where is the problem? Do you know the problem? The stock price of that company rose by 700%. And this is not new. I'm not talking about this company as a case. I'm talking about a uniformity that the gray market, the media, the operators, and now the apps, they have also started playing their role. You know, you can clearly see what is happening in the US. Now the apps, they are giving hype, price went up, retail investors enter considering that this stock price will go tick, 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 and then default. And this is very, very common in the capital markets of Asia, and now what is happening in the US, in the commodities, in the commodities also, like silver is almost 30. Come on, guys. What had happened to silver? It is just $30 per ounce. Come on. So guys, the moral of the story is very clear, and we really need to understand the moral of the story. That the moral of the story is that the corporate structure around us, whether it is an established corporate structure or it is a so-called unicorn, it is crumbling. And it is crumbling at a faster pace. I think more than what you expect, to be honest. Let it be honest, more than what you expect. Grab is not the first unicorn who has taken $2 billion of loan. In India also, the unicorns started taking the loans because equity financing is not available. And I don't think I need to tell you the difference between equity financing and the loan. I don't think I need to tell you. There is a pledge which needs to be given if you take the loan compared to the equity financing. Around $380 million of cost to be paid in the form of an interest only in the 5 years. Can you tell me a business will generate $380 million? Because that is the minimum you need to earn, even if I exclude the expenses. Companies like Razer, you can yourself check, they wanted to hire 1,000 roles. And many Chinese companies and many Asian companies defaulted on their bonds, and share price was like. One important thing before I conclude this video is that the retail investors across Asia and the world, they really need to understand how the things are shaping up. The you know exorbitant increase in the Bitcoin, millions of startups die, huge and unaccounted job cuts, startups raising funding in the form of dollar loan. More importantly, the loss-making startups are getting the hype. I don't want to name the investment bankers, but the well-established investment bankers are promoting the IPOs of the loss-making startups so that they get some money. By the way, there was a time when Uber was valued around 100 billion and WeWork valued around 50 billion, and don't ask me about Airbnb. Stock prices of companies up by 700% and then default. At the end of the day, who lost? We all understand. The time has come when retail investors needs to be alert, aware, and understand. Else, such things will continue to come and they continue to lose. This side, Rahul Magan here. You know our WhatsApp and everything, which is mentioned at the last of the videos. Have a great time ahead. Thank you.